Welcome to Real Smart, the real estate podcast you've been waiting for. I'm Spencer Kallick, a real estate and land use attorney at Matkins. On this show, I sit down with some of the most dynamic and accomplished voices in real estate to explore trends shaping the industry and uncover what truly sets great leaders apart. Today on Real Smart, we're joined by Dan Palmieri and Nick Angelich, co-managing partners of Northwood Investors, a firm focused on institutional quality real estate investment asset management across multiple asset classes, drawing on nearly 3 decades of combined experience at leading private equity and investment platforms like CIM Group, Northwood Investors, KKR, Commonwealth Partners. Dan and Nick have been at the center of some of the most significant mixed-use, multifamily industrial office strategies on the West Coast. Now at Sierra Ridge, they're bringing that blue chip background to a more entrepreneurial platform. Guys, welcome to the show.
Thanks, Spencer.
Thanks.
Absolutely.
Great to be here.
Very excited to have you all here. I feel bad I didn't get the Blue Blazer memo this morning, but, it's a Friday. Exactly. Trying to be a little more, fashion forward on a Friday here, but really excited to have you guys here. I think some people know you individually. Most people don't know that you've now teamed up and are starting this new platform. Tell me a little bit about how you got into this new platform. And maybe, Nick, I'll start with you.
Sure. Yeah, so Dan and I first met almost 20 years ago now at USC. And
you're one of those USC MRAD guys?
Not quite.
Okay.
Undergraduate.
Okay, fair enough.
School.
All right.
Little did we know then that, fast forward 2 decades, we'd be partners. But the time, as we grew up in the business together, both starting in commercial real estate in Los Angeles right out of school, as you know, it's a really small community. And if you find like-minded people that share values, you can really spend a lot of time together. You can really grow your relationship quickly. And you can really kind of suss out who you align with, who do you like, and who do you trust. And so Dan...
You picked this guy?
I did.
Wow. So I know I briefly introduced it, but tell me a little bit, Nick, about how your path to Sierra Ridge, sorry.
Yeah, absolutely. So born and raised in Los Angeles. My family was a very, very small player in the real estate world. I remember as a kid riding my bicycle around an industrial warehouse that my grandfather owned in Southern California as he was getting ready to lease it.
So industrial's in the blood.
It is in the blood. It is in the blood. And it's something that I was always interested in. Like a lot of people, I like to see the asset. I really like the people element of it, and it became a focus of mine. When I graduated USC in 2010, as we know, there were not a lot of real estate jobs available, and I got extremely fortunate to start as an analyst at Commonwealth Partners here in Los Angeles. We had one asset that we owned in suburban Dallas, but fast forward, 15 years later, billions and billions of dollars of transactions.
I assume that was because of you.
Not quite.
Okay. Maybe a little bit of credit.
Less red time.
All good.
Yeah.
Dan, I know somewhat of a similar story. You were most recently at KKR, but maybe back up a couple steps, take people to your real estate journey.
Yeah, so I was not born with industrial real estate in my blood. I grew up in Chicago, ultimately found my way out here to LA to come to USC, where I met Nick. And then like Nick, I graduated in a really rough job market. I was super fortunate, and the team at CIM gave me a shot as an analyst out of undergrad, which was an amazing place to learn. And I spent 2 years there working on loan pools and all kinds of very interesting transactions. After that, I moved on to Northwood Investors when they started their West Coast office, and really focused a lot on kind of Western U.S. transactions. Grew our platform from 1 asset to 15 out here, and then ultimately made the move over to KKR, where it ran the Western U.S. for the last 3 years. And, Nick and I have always had entrepreneurial visions, initially separately, and then as we talked more and more, we figured out it was probably better to do it together. So that's why we find ourselves here.
Tell me, most people talk about going out on their own. It's very in vogue right now, probably because of where the economy's at and people want to do different things. What did that conversation look like? Is this something that you guys were talking about, freshman year at a frat party, or is this all of a sudden, it's like, how did this materialize?
It's a good question. I mean, I think we always had conversations about hey, where do we want our careers to end up, right? And both of ours always eventually ended up with this, which is going out on our own, right? And a lot of what we did over the last 15 years was really focused on preparing ourselves to do this, learning from the right people, understanding best practices and worst practices, and ultimately figuring out what we wanted to put together as a new company. So, our real conversations probably were going on for the last 5 years in earnest. And it was just more about timing, figuring out when to go and ultimately how to do it.
So Sierra Ridge, I always joke about if you want to start, I guess it's different now. Every real estate firm all sounds the same, right? It's either a name or something about a ridge or a mountain or a street or something like that. How do we become a Sierra Ridge? Is it ChatGPT or what? How do we do that?
Prominently featured in our research, ChatGPT.
Excellent.
Yeah, look, we wanted to start something that obviously ties to our roots here in California. It's where we both live. We want something with permanency, like the mountain range that we all know and love to visit. And really, we didn't want a stone or a tree.
Or a color.
Fair enough. There you go. Sierra Ridge it is. You guys started up about last summer now. Tell me what you've been doing since the launch.
Look, we've been busy. We officially launched just recently as part of our first acquisition, but we've been really diligently building our systems, building our processes, refining our thesis, which we're excited to get into with you, Spencer, but really wanting to make sure that we have a very developed, very active, and very kind of ready to go platform before we really officially launched.
So we've got a crazy world right now. What's it like starting a new business in this crazy economic environment?
I mean, look, it's part of the reason that we started right now. I think when you look at real estate cycles, you kind of have to decide how you want to play it. Do you want to be part of a large organization with a lot of dry powder, or do you want to be doing it on your own, obviously controlling your destiny, choosing where you spend your time a little bit more? And so like that part of it's very exciting, right? There's obviously the economic uncertainty. We've been sitting here for 4 years now with a lot of uncertainty around how assets are pricing, demand profiles, et cetera, from tenants. And there's definitely a lot of choppiness. But I think that's what brings opportunity, and that's what excites us about starting out now.
Yeah, we touched on it a little bit on a previous question, but we both got started in the industry in a time with, significant questions, significant uncertainty, a lot of volatility. And I think that's the environment that we learned in. And that's where we really first started to get our momentum. And we just see a lot of similarities in this time right now. Volatility is good for a startup in general.
So you talked about a thesis. What is the thesis? What is the secret sauce? What are you guys out there trying to do right now?
Specifically what we're doing is we're bringing our decades of institutional experience investing on behalf of some of the world's largest investment partners. And we're bringing that to the private markets. And we're specifically right now focused on investing in middle market industrial assets in the Southwest of the United States.
So we're super involved through the use of the Anderson forecast in looking at all different sectors of real estate. Industrial has remained hot. Did you guys think to yourselves, gosh, I just want to stick with what is hot right now? Or why did you pick industrial as opposed to any other asset class?
That's a great question. I mean, I think, we've had a lot of experience throughout our career. There's a lot of different ways to invest. You can do bottoms up, you can do top down. And we've had the good fortune of learning from some of the smartest people in the business on both sides of the equation. And so a big part of our thesis is looking at the world top down and then also, really truly bottoms up. We pride ourselves on being owner operators. And I'd say in terms of industrial, the most interesting thing to us was, we like investing in sectors that have good long-term tailwinds, and industrial continues to have that, despite the momentary dislocations that are caused by demand shocks from COVID, interest rates, and other things.
Tariffs.
Supply, right? Tariffs. I mean, you can name 10 things that happened in the last 5 years, but the long-term trend continues to be strong. And then I think when you dig a little bit deeper, right, multifamily has a good amount of sort of legislative tail risk, especially when you're investing in California. And other blue jurisdictions. And so we looked at the relative pricing and some of the resets that we've seen happen in industrial, and we felt like this is the best risk-adjusted return to go pursue.
I love that. Starting a new business in a challenging economic time, not the easiest thing in the world. Talk to me a little about what's it been like fundraising, bringing on new LPs, and proving out a concept. Obviously, you've had a good experience where, frankly, the money was flowing, but when you had to go out and, knock on doors and ask people for money, what's that been looking like?
It's a great question. I mean, look, I think we've had great reception. I think a lot of that is based upon, our historic relationships with people. We've built trust over the last 15 years in the industry, and that's really helped. And then I think the other component of it that really resonates with a lot of investors is, the institutional systems and processes and just deal acumen, right? And we're bringing to private markets. And so what we found is that gets us our foot in the door, right? and then we have to prove that we know our stuff. And once we get through those layers, it's been pretty good. I mean, Nick, you can talk a little bit about the fundraise that we just did, but that really kind of was daunting, a little bit scary, right, when we first went out. But I'd say the receptivity was really, really awesome, and really excited us about the future of the business.
So put some meat on those bones. You guys have done a first couple deals now, raised some money. What do those look like? What are the kind of deals you're doing, and how have you been able to raise that money?
To build on what Dan just said, we've spent a lot of time with some of our kind of key early investors over really over our lifetimes. Some of our investors we've known since we were in college or even before. They've really gotten to see firsthand our values, our ethics. But then as we grew into our careers, they really kind of got to understand the type of deals we make and really our level of thoroughness that we take on each investment. And it was really fun reaching out to a lot of these early supporters with our first opportunity. They've been watching us firsthand for the past many months. We are constantly in touch with them, kind of sharing what we're up to, in both of our instances, looking for advice before we even left our companies to go out on our own. And we've really been able to build on that. And, raising equity for our first acquisition was really fun. It's something that we spent a lot of time, really in diligence on, before we even made our first call. Whether it was our market thesis, whether it was the sector that we were focused on, and then when it came to the specific building, we were really deep in it. We really knew our things, knew our stuff, and I think that shows through when we were talking to our investors.
So the first baby, tell us about that first deal.
Yes, the first acquisition we closed a couple weeks on. It's a 115,000 foot warehouse in the San Fernando Valley. It's been owned by a private individual for a couple of decades. He originally purchased it for his own business as a user, closed his business, kept it as an investment property, and really, for all intents and purposes, he was the low-cost provider in the market. He had a low basis. He didn't really need to invest too much capital into it as long as he kept it leased. Fast forward to the middle of 2025, his tenant moved out of state. They closed their business here in California, and he was left staring at a vacant property, several $1 million of deferred maintenance, and a decent amount of carry costs as well. And he wasn't ready to take that on, and so he was quickly looking for someone to come and invest and take the property off his hands.
So I assume in that situation, there's a lot of competition right now. That's a great location, great story to tell. What was your ability to get this deal done that maybe others weren't able to do?
Yeah, it was an interesting process. So, at the time when this deal came across the transom, Nick and I had been working a lot on our sort of top-down analysis, and we had isolated certain markets within broader LA County, Riverside County as interesting, just given, where vacancy rates were, where we saw, historic demand, and what we thought would kind of really fill up quickly. And, it was an interesting dynamic where a gentleman I had hired at Northwood many years ago had tied this up as an operator. He was well into diligence, and his capital partner ultimately fell out. So he called us and asked us if we could co-GP this transaction with him and help him ultimately close the transaction. And so, it fit our top-down thesis. When we really studied it, the bottoms-up part really worked well, and we were able to kind of keep the transaction on the rails and ultimately capitalize it.
So do we have a tenant?
Not yet.
We could break some news right now. We're 2 weeks in. I'm looking for 115 square feet, 150,000 square feet in the San Fernando Valley. We got a deal for you, right?
Yeah,
Okay.
absolutely.
Okay.
Yeah.
Good. Excellent. What's next? Where are you seeing the opportunities right now? Where are you seeing kind of the inefficiencies, the mispricing that leads to that next deal?
When you look at our business, a big reason why we started this business, right, is because we saw a big gap in availability of transactions for high net worth family office individuals. And the unique thing about that space is that not everyone does it the same. Right? If you look at big asset managers, a lot of folks kind of follow the same trends. They have the same deal profiles that they're looking for. I spent time, 10 years at Northwood where we had a 15-year fund duration, and I saw the competitive advantage that we had with that. And so we're looking at family office capital and seeing the ability to do, different profiles of deals. And I'd say there's a few different areas that we're focused on. A lot of it is targeting deals with operating inefficiencies. And that can mean, small bay parks that are owned by mom and pop owners. We have a deal under contract right now. It's a small bay portfolio that ultimately a mom and pop owns and was leasing for $1 a foot when the market's $1.60. And so we like finding those. Those are really unique opportunities to drive like very strong returns. And then we're also spending time in areas where, institutional capital markets aren't really that thriving right now, which would be, kind of midterm lease buildings, 4 to 7 years of WALT, not really core, not really value add, but family office folks love those, right? I think a lot of groups understand the basis play. If they can get a decent yield and buy really high quality real estate, they'll do that. And so that's a big part of where we've been spending our time in these early days.
So what's the state of West Coast industrial right now? What are you seeing? What's your unique vantage point? People talk about industrial all the time, but what's your perspective on it, and where do you see those potential next steps or next deals that you're looking at?
Yeah, I don't think we're unique in seeing the long-term tailwinds in the industrial sector. It's certainly shared by a lot of people in our industry. But I think what you're finding coming off really a historic couple years, 2020 through 2022 of capital deployment, capital activity, development starts, followed by this kind of dramatic rise in interest rates, is that it's really thinned the active buyer pool. And there has been a dramatic bid-ask spread between what owners thought their properties were worth, or what they probably were worth maybe in 2021 and 2022, what they received, unsolicited offers on, and really what they're worth today. We've seen a dramatic reset of rents across really much of the nation, certainly across Los Angeles. The most active serviced spaces in the industrial sector are either the really large assets that are really being acquired by allocators, and they're looking to just increase their exposure to industrial, really however they can get it. Focused on credit, focused on market, but they're really just buying to buy. And then the really small assets that are owned by one-off individuals that like a building because it has a 5 cap and it's located in Costa Mesa, right? They're not really looking at it as an investor. So it really creates this unique kind of, it's really a large space, but it's traditionally been called the middle markets. And those just are not as actively pursued. And it's really created some, unique wealth creation opportunities.
So you both came from large organizations, right? KKR has a couple employees, I understand. And now it's the two of you.
Mm-hmm.
Talk to me about how that's changed your day-to-day, what you're spending your time on, your leadership style, and, is the hope that this is going to turn into a KKR one day, or is it always just going to be the two of you? Or what's it look like going forward?
I've worked at large and mid-sized institutions, and, there's pros and cons to everything, right? I'd say like when you look at what we're doing right now, just the two of us, it's been really interesting, right? Because we're doing everything through, from procuring insurance to, underwriting the transactions and ultimately executing the deals, right? So it's sort of soup to nuts, everything, which is fun. It's like very invigorating. One, we're like learning a little bit about the business side of it and, creating an actual like corporation. And then the other part of it is, we're used to having done all this stuff at various points in our careers, but now we're doing it all together. And I'd say like the biggest thing that we're focused on right now is how do we create, efficiencies for ourselves? The most valuable thing we have is our time. And so it's really been about prioritizing our time, and you think about leadership, there's two of us, but we're both leading this charge. And it's ultimately about, sitting down and kind of, agreeing on like, where do we spend our time? What should we do next? And so that part of it's been really fun.
Yeah, I think I know we are very focused not necessarily on building a large asset management firm, but we're focused on making sound, profitable real estate investments. And one of the surest ways that we think we can achieve that is by keeping our overhead down. I think Dan and I know, a lot of times people want to start their own business, they'll go out and focus on raising a fund, right? They want to raise a fund, and it's definitely something we considered. But when we really spent time really looking at the economics of it, really understanding how many people we would have to hire to raise that fund, and really looking at how long it would take to deploy that capital, we're really focused on asset by asset acquisitions. We're focused on finding the right capital for the acquisitions, and we're focused on maximizing profits for our investors by keeping our overhead down as much as we can.
So for people who are listening to this who maybe are thinking about, hey, I want to do exactly what you're doing, start my own shop, what advice would you have to them, or what things would you tell them to consider before they go out on their own?
There's a lot, but I'd say like the biggest thing is if you're serious about it, and if you know that is in your personality to do something like this, the sooner you do it, the better. You obviously have to, earn trust, create relationships, learn what You need to learn. But I think at the point where you feel like you're there, you should do it. I would say, the support that we found through our network has been overwhelming, and way exceeded what we expected. And so I think that's a big hesitancy when people think about going out on their own. What's it going to be like? If you have strong network, if you have strong relationships, it is easier than you think, right, to get in the door. I would say, there are a lot of things that are harder. And so you just have to be prepared for that. I would also say, you need to be really thoughtful about picking your partner. I think Nick and I were both very thoughtful about picking our partner. And I had someone ask me one time, you're partnering with Nick, is there anybody else that you would have partnered with? And I said, no, it's the top guy I would have partnered with. And I think that's a big part of what you need to figure out, is people have tried to do this on their own. And I think it's hard. You need a partner in crime. You need someone there standing shoulder to shoulder with you.
Partnership is huge. I'm curious kind of how you divide labor. Who does what? How do you, we don't agree. How do you figure that up? I mean, you guys are in, no marriage basically. Right? So,
Yeah.
I'm guessing maybe even you may actually talk and see each other probably more than you see your spouses perhaps.
Yeah, probably.
So I'm curious, how do you deal with that partnership?
I think one thing we're very focused on is just open communication. We are never afraid to share our opinions, whether it's our gut reaction or something we've been thinking about for a while. We are very encouraging of each other to kind of speak up, right? Because that's, I think, first and foremost, we can't leave anything unspoken.
Is this marriage advice or partnership advice? I'm just curious. Okay.
Both, better. Yeah.
Because my wife is probably listening to this right now, so make sure we're on the same page. All right, go ahead.
And then, I think we have similar backgrounds, but we also have spent some different times in our real estate careers. I spent all of my career at a smaller, vertically integrated company. When you think about the team, we had a very large portfolio, and we really spent a lot of our time really in the weeds, really deep in the fundamentals. And Dan was fortunate in his last few years, specifically at KKR. That's a large thematic investor. So we can come at things with different perspectives, and that's very beneficial. I think we like doing different things more than others, and naturally we're still figuring it out a little bit, but we want to make sure no matter what that we're having fun doing what we do every day, because if you're not having fun, you shouldn't be doing it, right? So
We're going to pause that for a second.
yeah,
You've got to be having fun. If you're not having fun, you're doing something wrong.
Absolutely.
We all work way too hard to not have a good time.
Yes.
And I'm not saying things aren't stressful, but so often I hear people saying, I'm just not having fun. I'm like, then what are you doing? I'm not saying it has to be fun every second, but you've got to be having fun. And real estate's fun. This is, people pay us to do this. It's phenomenal. I love it. So thank you for saying that.
Yeah,
It's
we're blessed to do what we do, right? And the relationships are the best part of it. We have a very strong relationship, that we're continuing to grow, but relationships with everybody, like you, Spencer, those are the best part of the business, I would say. And those are more fun when they're fun.
Amen. Amen.
Yeah.
Again, you both came from larger institutions. I'm curious, what did you bring with you from those organizations? And what did you say, we're never going to do it like XYZ organization does it?
Look, I think some of the things that you just asked about, right? How do you deal with disagreements? Some shops work as there's one person that really makes the ultimate decision, and then there's other ones that work as a true communal decision-making body. And so I think we've learned a lot, from experiencing that. And one of the best things that, I think we've brought with us is just that overall, making a decision together, right? We can dissent on certain things and we can have a debate over it, but at the end of the day, we'll get to the right answer because there's two different minds thinking about the same problem, and we're going to find the right answer. And so that's been really important. And I'd say the other thing is, just really seeing how different groups execute on business plans. We brought with a lot of, ideas around reporting and, what does it mean to actually operate an asset? How in the weeds do you get? And I think a lot of that we've learned over the years has really found its way to Sierra Ridge. We're very fortunate for having learned from a lot of really great people on that.
What did you leave behind, Nick?
I was taught at Commonwealth Partners that, like any business, in order to be successful, you need to be focused on your customer and provide what your customer wants. And we are very focused on delivering the best performance to our investors. And really, it's by making sure that our customer, which is our tenant, is happy with the product that we're delivering. And they're happy with the service and the level of detail that we can provide. And I'll never forget that. That was something that was really drummed into us every day at Commonwealth, and something that we're focused on bringing here to Sierra Ridge.
I love that. So I'm going to assume this new Sierra, the new San Fernando Valley deal, your first one out the gate, is going to be the best deal you've ever done before. But if perhaps it's not, it's a little early, we don't have a tenant yet, we're looking for one. Yes, the space.
Owner users are good too.
Owner users are good. Exactly. Anyone who's going to pay you, what, $15 a square foot?
We'll take that.
You'll take it, I know. You'll suffer through it. What's the best deal you've ever been involved in?
I mean, I'd have to say this one because it's the first one we threw down on our own.
We haven't proved that out yet. I'm curious, in your history, in past job, what's the best, since you've been in real estate, what's the best deal you've ever been involved in?
For me personally, it was an investment that I made with a team at Northwood. We ultimately bought a loan on a site about 1.25 acres in downtown San Francisco. There was a really complicated ownership structure. It had gone into bankruptcy. Then there was a lawsuit filed by the prior owner against the lender. It was going to court. And we ultimately partnered with a group in San Francisco who was excellent at developing, but also just relationship management. And it was just a really fun transaction because we were able to go buy this loan at a pretty substantial discount. And we were going to create a 2 million square foot development. 21 months later, we sold it to Oceanwide for a very nice, tidy profit. But I would say one of the best things about that was just getting to work as a team on a very complex transaction, sitting in, conference rooms for 12 hours a day, trying to hammer all this stuff out for a month. It was just a fun, team effort. And that really, got me excited in real estate for, the future.
And I understand that deal just traded again, and they're probably going vertical on a new office tower there.
I would love to see it built.
I think a lot of people would. I love that to hear. Nick, what about you?
I think in a lot of instances, it's easy to buy a building. You just pay the most, right?
Is that how it works?
In many instances, not always.
It's just money, right?
Just pay the most, right? So I think when you asked that question, I kind of actually started thinking about a lease. And it was a very complicated lease transaction that we did in our portfolio in the Pacific Northwest. It was 2022. It was a volatile market. This was specifically an office lease, a couple 100,000 feet. There were 3 tenants in the way. We were relocating one of your large competitors from a named tower into a non-named tower. And there were just a lot of moving pieces. And it ultimately resulted in a couple extensions, much more lease term at the property, and record rates. So we'll take all 3 of those, right?
I love it.
Yeah.
I love it.
Yeah.
You can't talk with leaders in real estate these days without talking about AI. Is AI here? Is it going to change everything? How are you all using it? Or is it a lot of talk and not a lot of action?
Look, I think if you're not using it, you're behind, right? Depending on where you are, right? If you're in a big institution, there's a lot of guardrails around AI, and rightfully so, right? You can't be sharing confidential information or anything like that. But I would say, we've been able to use it to provide a lot more efficiency in our days, whether that's, taking comp data and throwing it into, a presentation chart, or analyzing a data set and then, spending real time on it. It can do work as a second-year analyst. It's pretty good. So we've been utilizing it, I'd say around the edges to make ourselves more efficient. One thing we'll never do is put confidential information in it. That's just a no-no, right? And that's another thing we've taken from big firms. I'd say just not to go off on a tangent, but a lot of people talk about how, it's replacing junior people. But I think if you look at our business, you look at the senior deal makers, you have to be able to think on your own. And the only way that you learn to think on your own is by growing up in the industry, creating relationships, right? And so I think people who are thinking that it's going to automate their whole business and they're going to run a business with 2 people and they're going to have 30 million square feet of assets under management, you could probably do it. But I think it's a really bad thing for your company if you're thinking that that's the direction that you want to take it.
Nick, what about you? Is AI going to be your third partner to Bridge, or get rid of a partner, or never have to hire an employee ever again? Or what do you think? I'm trying to stir it up here.
I love it. It's an awesome tool, right? It's a huge advantage for doing very kind of time-intensive, endeavors that traditionally could have taken many, many hours. But it's not replacing, like Dan said, it's not replacing the people element of the business. You can never really understand. It's really helpful maybe at understanding the first layer of something, but it's not going to go to the second, third, or fourth layer, which is what is really imperative in our business. So it could, it could record someone's name, and, maybe it can take something about you, Spencer, and about, your interests and the type of coffee you drink, and it can make some assessment about maybe what the best business would be there, but it doesn't get to the why. And it doesn't think outside the box, at least at this point. So
again, AI is here to stay, I agree, but it doesn't replace the relationships. It doesn't replace the market knowledge, the intuition that, like you said, you learn through reps, through doing it year after year by failing and then learning again. And I think that's really important part of this discussion.
Don't get us wrong. We use it every day, right? But it's not substituting either Dan or myself in a conversation, in a relationship.
I think it's been really productive in terms of like coming up with new ways to source transactions, source tenants, right? Things that you could use CoStar for, but you'd have to sift through lists of 1,000 buildings. AI can now pull some of this from public data and create a hit list for you to go pursue, right? And it can do it in 20 minutes. And that was, something that we would do back in our old careers, and it would take us a day to sort through that list. So I'd say like the efficiency factor is pretty real.
So as you look ahead, who is the ideal investor in Sierra Ridge? Who is the ideal partner for you all?
Well, I'm glad that you put it as partner, because I think that is how Nick and I view anyone that we work with, whether that's a leasing broker, investor, an attorney, et cetera, right? That's the most important thing. Do we see eye to eye, right? Are we aligned in terms of values? Are we aligned in terms of goals? And that's the most important thing for us. I'd say our ideal investor right now is, family office, ultra high net worth people that are looking for direct access to real estate, that are ultimately, not able to do it on a direct basis on their own, or they don't want to, and they find other options lacking, right? I think it was a big part of why Nick and I wanted to focus on this space, is we felt like it was under-addressed, and we want to provide access to that capital to go directly invest in real estate. And we like our structure right now because, ultimately these folks get to opt into each deal. It's not a commingled fund. There's no definitive time horizon. And we've got family offices that are, 15-year holders, and we have other ones that love to flip transactions after 2 or 3 years on a value add basis. So it really does run the gambit, but I'd say like the biggest thing is, alignment on what are we trying to achieve.
Our best investor is someone that wants to have a relationship with Dan and me when it comes to their investment. It's someone that prioritizes speaking with the decision makers at their operating partner. It's someone that wants to find, unique, specialized investment opportunities. They're not just allocating to an index, or they're not just allocating to a large fund. They're looking for specialists and for a sharpshooter. That's our best investor.
All right. Well, if there are people out there who are listening to this, want to invest, was it dannick.com? No. You guys have a website, right?
We do.
You're out there. People can find you. I'm curious, when you're not working, I mean, as entrepreneurs, you're always working. When you're not working, what are you guys doing? What are you spending your time?
Well, Nick and I both spend a lot of time with our families. We both have a wife and 3 kids.
Do the families hang out together too?
Yeah, we're working on that.
Okay.
I'd say like...
Can't get enough of each other.
Yeah, exactly. Yeah, I mean, look, we're both, very family centric. I'd say that's the most rewarding part of our life, as much as we like doing what we do on a day-to-day basis.
You know what that entails? Kids' sports, all those fun family activities. I'm fortunate. I just got back from a fun spring break trip with my family and took my 2 oldest kids fishing. I love to fish. I think we caught 6 different species, 22 fish. So
amazing.
And then Nick and I like to play a lot of golf together.
Okay. Fair enough.
Yeah.
That's sometimes work,
Of course it is. Absolutely. Absolutely.
It's work keeping my ball in the field.
You don't have to tell me about that. I know all about it. As we take a step back and we think about your leadership styles and your advice to young folks who are maybe looking to get into business. Maybe there's some USC freshman or senior out there is thinking about what's next, or, again, like we talked about, some folks who are at large institutions who are thinking about, hey, going to go out with a buddy and start my own shop. What advice do you have?
I would say, your own personal brand and your relationships are really truly the most important thing. How you conduct yourself. I mean, Nick and I do a lot of these coffee chats with USC, juniors, seniors, whatever, young folks in the industry. I always try and lead with that, right? I mean, your own integrity, your honor, your morals, that's ultimately what's going to get you to where you want to be. And then I like to tell people to work backwards. Where do you want to be in 15 years? What do you want to be doing, right? If you want to be entrepreneurial, that's one path. If you want to, stay in an institutional seat, that's another. But I always tell them to look 15 years in the future and then kind of work backwards. How do you get there, right?
I have to ask you, where are you going to be 15 years in the future? Where's CRH going to be 15 years in the future?
I think if we're being honest, we don't know. But we hope to be
on a golf course, perhaps?
Yes. No. We're in this for a long time. I mean, if Nick and I aren't doing this when we're 70 years old, I think we'd be disappointed. So, our hope is that we grow a business that's sizable, right? But as Nick alluded to earlier, we're not trying to create a big asset manager. We're trying to create kind of a boutique investment firm that caters to high net worth individuals. And so, I don't know how big we'll be, but at the end of the day, that's the goal.
Well, guys, look, I really appreciate you making the time. This has been super interesting. I'm excited for you. I'm excited for this first deal. We're going to get that lease signed. I'm confident. And it's to be on to many more. So thank you so much for making the time. And thanks for everyone listening out there to Real Smart. We will talk soon. Thanks so much. Have a great day. The content of this podcast is for the general informational purposes only and does not constitute legal advice. Listening to this podcast does not create an attorney-client relationship between you, the host, guest, or Alan Matkins. You should not act or rely on any information discussed without first consulting a qualified attorney regarding your specific situation. Any opinions expressed are those of the individual speaking and do not necessarily reflect the views of Alan Matkins or its clients.